Good morning, everyone. This is Rachel live from Calgine Studios, and you're watching The Opening Bell. Let us cast an eye now over how market charter is panning out today. The ASX 200 is turbocharged today, gaining 0.51% to 7,330 and setting a new 52-week high. The top performing stocks in this index are Brickworks and Unibail-Rodamco Westfield. Brickworks noted that profits for its property trust unit are set to jump up twofold in the financial year that ends later this month compared to the prior year. Perenti Global, the mining services group, jumped after winning a $648 million contract to operate a Samphire Resources mine in Botswana. Overall, materials, healthcare and IT sectors are pulling the ASX strings, while financials and IT are trading in the red zone. US stocks saw subdued trade on Tuesday's session, with all major indices ending flat as inflation worries weighed on the markets. The Dow Jones fell at 0.09%, the S&P 500 gained 0.02%, and the Nasdaq added 0.31%, with the big tech FANG stocks leading shares higher. The equity market's volatility index fell to as low as 15.15, a level not seen since February 2020. Besides inflation worries, the US economy's skewed demand and supply balance are apparently forcing the markets to pull back. The stress was palpable in most stock segments, and worries remain that the Fed may start discussing tapering asset purchases at next week's Federal Open Market Committee meeting. More so after US Treasury Secretary Janet Yellen's comment that higher US interest rates would be good for the economy. Meanwhile, the 10-year US Treasury note fell 3.4 basis points to 1.5%, suggesting bond investors do not see a spike in inflation despite nagging jitters over the Federal Reserve's insistence a likely jump in consumer prices will be transient. The dollar gained modestly on Tuesday, consolidating more of last week's jobs data-driven swings ahead of the European Central Bank meeting and highly anticipated US consumer price index on Thursday. Much of this week's dollar trading has been consolidation of last week's gains on stellar automatic data processing private payrolls, followed by losses on mediocre non-farm payrolls. With a reluctance to tighten and hopes rising that inflation will moderate over time, keeping Treasury yields and the dollar heavy this quarter. With 10-year Treasury yields at their lowest since May the 7th dive on April's poor non-farm payrolls results, the reaction to Thursday's CPI is even more important for the dollar. Moving on to our next segment now, let us zoom our lens on the Australian share market today. Let us look at the energy sector first. Australian energy players such as Woodside Petroleum, AGL Energy, Beach Resources and Origin Energy are trading in the green amid an uptick in oil prices. On Tuesday, crude oil prices traded higher, hitting the highest level in over 2 years after the top US diplomat said that several sanctions against Iran would remain in place, even if the United States were to reach a nuclear deal with Tehran. Brent crude rose 73 cents or 1% to close at $72 a barrel, the highest it settled since May 2019. West Texas Intermediate oil rose 82 cents or 1.2% to settle at $70 a barrel, the highest it's been since October 2018. Notably, the oil prices have been on a steady incline since the beginning of 2021. That's on the back of a post-COVID recovery in global demand and supply cuts by key oil-producing countries. Last week, oil prices hit a 2-year high when OPEC and its members agreed to ease curbs on oil production in the wake of diminishing supply glut and improving demand. While the recently released mixed US inventory reports stabilised some gains in the oil market, OPEC's buoyant projection over a global consumption rebound and its decision to raise oil output in July appears to have painted a bullish picture for the oil market. However, it is yet to be seen how speedier the demand recovery will occur and allow markets to absorb these additional barrels. A lot on the demand side depends on the subsequent virus waves and the success of global vaccination campaigns. Furthermore, it will be interesting to watch how OPEC will cope with a potential surge in Iranian oil output as the country aims to revive its 2015 nuclear deal with 6 world powers. Now, before I share some market trending updates, it's time for a break.